Good afternoon, everyone. Gabe Velazquez here with you, transparenttradesolutions.com on a Tuesday. This is 7 May. Welcome back, everybody. Again, I'm going to have a class a week from this Thursday. By the way, if you have a topic you want to cover, post it in the comment section, okay? And I'll review it with the team and see if we can put together a class for that. I have some subjects I'm looking at right now. So subject is to be determined, but for it's going to be, I'm going to hold it on Thursday, and I will be announcing it this coming Thursday, the actual topic. So if you do have something you want to cover, go ahead and post it in the comments section, and we'll review it, and maybe we'll do a class on that, a free class. Okay. All right. So let's get right into it. Again, subscribe to the newsletter, give me a thumbs up, and get people to sign up for the channel if they're not watching already, so I can grow the channel. All right, let's go ahead and get into the charts, and get right into the S&P. After last week's rally, we basically are just consolidating, I would say, more or less. If you take a look at the S&P, last couple of days since the rally, we kind of drifted higher on Friday after the non-farm payrolls. Again, as I mentioned, we were long calls in the spider on in TTS and left some money on the table, I have to tell you, because we got out on Friday and the market kept going higher. But those expired yesterday, and we're looking at some other areas here. So all in all, kind of in no man's land right now relative to those highs. That demand zone, that supply zone, kind of, we'll see now. Market's obviously getting a little bit stretched. We can call this a consolidation and then possibly a push higher. All predicated, I think, now on interest rates. We have a bond auction tomorrow, 10-year and a 30-year on Thursday. That may be a catalyst. The NASDAQ similarly, all the AI stocks and everything are kind of just churning. Disney got hit today. That was impacting the Dow a little bit. But you can see just across the charts here, not a lot really changing. We've got some levels coming up here on the Dow, and Russell also just been, kind of all over the place, having some nice moves, but not any quality of distribution or accumulation levels until we get up to these extremes on this massive range, like 1900 to about 2100 is the range in the Russell. Also Bitcoin, we talked about this Bitcoin level here. Now it's stalling out at this level here, consolidating as well. So nothing new there. We get some pullback areas in Bitcoin as well, and then some shorting opportunities up higher. And generally speaking, Bitcoin is now in a massive range between, let's call it 58K and 70, let's call it 74K. That is really your range so far. What's going to get us out of this? Obviously, who knows? And the halving thing, and everybody was hyping up the halving that was going to give Bitcoin a run for 100K. Yeah. So the fact that they took half the supply, why isn't this thing, at 100K yet? So don't believe that stuff. Okay. All right. Also, VIX going to look down to 12.5 on that. We've been talking about this, been a pretty good, at least, again, the VIX goes down to 12.5. Doesn't mean you sell everything. This means you get cautious. And typically, if you go back and pinpoint every one of these lows here, market has struggled to gain any further traction at these points. So keep that in mind also. The 10-year yield, we got some levels coming up as well here and here. That level that we had posted did work eventually. I mean, it took a long time. So that becomes now the new resistance, this 471 level. Dollar tracking rates very closely as somewhat, we got a dollar rally. We got some demand here in the dollar. We got UK coming out with rates later this, I think Thursday. we had Aussie, we had the Aussie moving too pretty, that they didn't do anything on the rate front. And that's also kind of pulling back in a massive range as well. It came up to resistance at 66.72 and pulled back. Everything else really, metals, nothing new there. Also back and forth, big gyrations, no quality to speak of in the metals. You can see also went from one big range to another big range. And, I'm looking for pullbacks in gold much lower as well. And let's see what else. I've been mentioning nat gas recently in my newsletter, possible breakout. We got to get above 231. That's if it hangs in here and doesn't fall back down here, that also increases the odds that it is ready for a breakout. So we'll see what happens. That we're watching that very closely and looking to either buy the futures or boil calls or something along that line. And also similarly, the grains I've been discussing in the newsletter and so forth, that's also consolidating. Similar situation here. We've consolidated today. We haven't pulled back sharply. As long as we don't fall apart here, this also increases the odds that we go higher in the grain markets and that this breakout is going to be sustainable across all three grain markets. We do have an ag report on Friday. Keep that in mind if you're trading grains. We do have an ag report on Friday that could create some further volatility and extend the moves as well. So that kind of sums it up, everybody. Again, with the lack of any further catalyst until next week, by the way, we got CPI next, I believe it's either next Wednesday or Thursday next week. And then we have, this week, I think the bond auctions are maybe a market mover. So we'll see what happens with that. And until then, I think the markets are still trying to, see if this rallies for real, we go to new highs or just another more of the range kind of trading situation with the S&P. Okay. All right. Have a great rest of your week. And again, if you have any topics you want to discuss, post it on the commentary. I am going to put together that class starting in the next couple of days. So if you have that request, I'll look into it. Okay. And you can also contact me at support@transparenttrading-solutions.com. Okay. Have a great rest of your week. Talk soon.